Hello, everyone, and welcome back to the channel. Today, we're diving straight into one of the most talked about stocks in the technology sector, Palantir, ticker symbol PLTR. This company has been making waves, and for good reason, as its market capitalization has soared past an astounding $319 billion as of June 12th, 2025, a dramatic leap from just $15.67 billion at its public offering in September 2020. It's a compelling story of remarkable growth and strategic positioning that demands our attention, especially for those watching the evolving landscape of artificial intelligence and data analytics. Palantir is a technology company specializing in big data analytics founded in 2003 by Peter Thiel, Alex Karp, Joe Lonsdale, and Stephen Cohen. They build data integration and analysis platforms that empower organizations to make sense of large, complex data sets, with their software crucial for decision-making across various sectors, including government, defense, finance, and healthcare. To illustrate, consider Palantir Gotham, which acts as a high-tech investigative platform for enforcement agencies. Imagine a scenario where a high-profile financial scam involves scattered evidence, bank transactions, corporate filings, tax data, call records, and property registries. Manually, this would take months to untangle. Gotham consolidates all this disparate data onto a single interface, identifying hidden connections and surfacing patterns to trace financial crimes faster, turning fragmented data into a clear, provable money trail. Then there's Palantir Foundry, which functions like an internal watchdog for financial institutions. For a large bank dealing with real-time transaction data, KYC information, and risk alerts, Foundry acts as a digital control room. It monitors data across departments, flagging suspicious activities in real time, assessing potential risks, and recommending actions like freezing an account or alerting compliance teams before issues escalate. Palantir earns its revenue primarily by charging governments and companies for using its software, Gotham and Foundry, in addition to setting up custom solutions for unique client needs. They also generate income through ongoing subscription fees to maintain and update these systems. Their clientele is diverse, encompassing governments for defense, security, disaster response, and healthcare fraud, as well as corporates for supply chain analysis, financial fraud detection, and manufacturing optimization. The company has significantly evolved into a leading AI powerhouse, integrating machine learning into its platforms from its very inception. A major milestone was the 2023 launch of its Artificial Intelligence Platform, or AIP, which directly incorporates large language models and generative AI into both Gotham and Foundry. Palantir CEO Alex Karp has highlighted global AI competition as a top priority, and analysts have even positioned Palantir's AIP ahead of some major tech rivals. One research firm recently recognized Palantir as the technology leader in AI and machine learning platforms, with AI platform sales projected to grow at a staggering 41% annually through 2028. Government contracts remain a foundational aspect of Palantir's business, consistently accounting for about 55% of its total revenue. In the first quarter of 2025, U.S. government revenue alone surged by 45% year over year, reaching $373 million. A significant highlight of this strength is their landmark agreement with the U.S. Army for the Maven Smart System, or MSS. In May 2025, the Department of Defense announced a substantial $795 million modification to an existing contract for MSS software licenses, bringing the total potential value of this single deal to nearly $1.3 billion. This expanding relationship is further underscored by a recent deal with NATO for the Maven system, solidifying Palantir's growing influence in military operations. It's also worth noting that the Trump administration is reportedly tapping Palantir to facilitate data sharing across various federal agencies, including ongoing negotiations with the Social Security Administration and the Internal Revenue Service. While this has raised questions regarding privacy and oversight, Palantir has publicly stated that it does not unlawfully surveil Americans and that its Foundry platform employs granular security protections. Beyond its robust government foundation, the commercial segment of Palantir's business is experiencing explosive growth, largely fueled by the rapid adoption of its AI platform. In Q1 2025, U.S. commercial revenue skyrocketed by 71% year over year to $255 million, marking the first time this segment crossed a $1 billion annual run rate. The total contract value within this commercial segment grew an astonishing 239% compared to the previous year, signaling strong market demand for enterprise AI solutions that can be deployed swiftly and securely to address complex operational challenges. Looking at Palantir's financial trajectory, the company's revenue increased from $2.23 billion in 2023 to $2.87 billion in 2024, representing a 28.8% increase. For fiscal year 2025, Palantir has already raised its revenue forecast to between $3.89 billion and $3.90 billion, demonstrating strong confidence in continued high growth. Furthermore, the company has solidified its profitability, achieving a GAAP operating income of $176 million in Q1 2025, which translates to a healthy 20% margin. The stock's performance has been nothing short of phenomenal. It has delivered an astounding 467.80% gain over the past year. Over the last 6 months, it's seen an impressive increase of 84.27%, and year-to-date, a powerful return of 77.72%. Since its direct listing, Palantir's value has skyrocketed by more than 1,250%. On June 13th, the stock demonstrated significant strength, trading as high as $138.69 and maintaining a gain of over 2% from its previous close. This positive performance indicates strong buying interest and has pushed the stock close to its 52-week high of $139.75. However, a closer look at its valuation reveals some points of caution. Palantir currently trades at an extremely high PE ratio, around 603.30 to 711.56, which suggests that investors have priced in massive future earnings growth. While common for high-growth tech companies, this valuation makes the stock highly sensitive to any shifts in growth expectations or market sentiment. Critically, Palantir's price-to-sales ratio reached a record high of 109 times sales in June, making it 3 times more expensive than the next closest company in the S&P 500. Historically, software stocks with PS multiples above 105 have seen significant declines, with an average peak-to-trough drop of 80%. This means that while the company is exceptional, its stock valuation presents a notable risk profile. Despite these valuation concerns, institutional investors are increasingly looking at Palantir. While retail investors currently hold over 40% of the stock, significantly higher than other tech giants, there's a belief that more institutions will begin building positions as the company matures and the demand for AI-driven platforms continues to climb. This could provide a potential second wave of momentum for the stock. Analyst opinions are mixed, with a consensus hold rating and an average price target of $86.30, but some firms like Loop Capital have raised their price target to $155 with a buy rating. In conclusion, Palantir's journey reflects a powerful blend of cutting-edge technology, strategic government partnerships, and rapidly expanding commercial success, particularly driven by its AI platform. While its astounding growth and market position are undeniable, investors must consider the stock's premium valuation. Thank you for tuning in, and we'll see you next time.